knowing that really statistics tell us over and over again that patients are more concerned about affordability, the better thing to do is look at the different loan products and find a loan product that is not nearly as expensive and one, again, that fits the treatment protocol that you're offering, and again, with maybe extended terms that make it doable.
Hello, everybody, and welcome to another episode of the Raving Patients Podcast. As you know, I'm your host, Dr. Len Tau, and I hope everybody is staying warm. I am actually recording this. Remember, I live in South Florida, and it is like 40 degrees today. That's why I'm wearing a sweatshirt, because I'm so cold. I returned from Boston from Yankee, and I got bad weather there or cold weather there, and I'm back to cold weather here again, so I'm hoping the weather improves. But I hope you're having a great day from wherever you're listening to this episode from. As always, I want to thank the sponsors, Dental Intelligence, CallRail, and Net32 for their continued support. And as always, want to remind everybody about my event, Supercharge Your Dental Practice. It's scheduled for September 25th through 27th at Pier 66 in Fort Lauderdale, Florida. You can find out more information at superchargeyourdentalpractice.com, and you can use the code RAVING, R-A-V-I-N-G, to register and save $100 on your registration. Raving is the code you want to use. Today's episode is called Rebuilding the Bridge Between Diagnosis and Decision. My guest is Nancy Coy from FinanceRx. Let me read Nancy's biography as we jump into this episode. Nancy is a patient and consumer lending executive with more than 25 years of experience in healthcare and dentistry. She's founded 2 patient lending companies and now leads FinanceRx Venture Studio, where she diagnoses breakdowns in the money conversation and helps practices implement a lender-agnostic, compliant pathway to care that increases case acceptance. So please welcome to the Raving Patients Podcast, Nancy Coy. Nancy, thank you so much for joining me today.
Absolutely. Pleasure to be here. Thank you for having me.
So I'm sure you know, because we've obviously discussed before, I am a huge advocate of third-party financing. I actually have a on-demand class I still give called Supercharging Your Case Acceptance Using Third-Party Financing. So I teach all about third-party financing, kind of the rules that you need to stick by. I make suggestions based on various companies that I have partnered with. And the goal is to really get practices using more third-party financing, because it's amazing. Everybody takes advantage of it. And they just think that patients are going to pay cash, and they're like stuck in their ways. So I'm a huge advocate of this. I'm really excited to dive a little bit deeper into the various things related to third-party financing in the dental industry.
Great.
So as we kind of start off, can you just kind of talk about your background? How you got into the space? I know you mentioned in the bio that you brought a couple of companies to the dental industry. So can you just kind of give your background so people understand where you're coming from?
Absolutely. So, been in the industry, started my career offering providers actually capital medical equipment, and became very aware of the value of using payments for them to acquire equipment. So it was around affordability. Worked in the acute setting, director of physician relations, director of admissions of a subacute, and it was back really in the early 90s. And quite frankly, I was really almost, there's not really any other word to say that was paralyzed, because at that point we really didn't have lending options like we have today. And I had so many patients that were sitting across from me that were wanting and needing care. And it maybe was a high deductible, but they just couldn't move forward. And it was almost a gut pinch sometimes. Well, then I moved on, started a healthcare equipment leasing company myself, and that was very successful until 2008 when the market crashed, and we had providers all over the country that were really compromised. They didn't have an option for patients to say yes to the care that they had prescribed, and of course at that time, almost all lenders that were in space, nobody was really approving anything. So I founded what is today Healthcare Finance Direct, HFD. Sold my interest in 2016, and then in April, and then I did consulting for a couple years, designing financing programs for big enterprise providers around the country, and then founded the first 50-state regulatory compliant in-house receivable solution, and then decided that it was time to move on. And when I did, I really felt like the industry didn't necessarily need another lender right now. Not that that's a bad thing, lenders come and go, but really what was really important is that we became really proficient at the money conversation.
Got it. I think the money conversation obviously is a big key to getting a patient to say yes. Obviously, they need to understand the value that you're bringing them, but a lot of patients do not want to move forward because they're concerned about the financing part of it. So I think that by helping practices have or create better trust with your patients, but also offer an option to pay over time, the case acceptance is going to skyrocket here. So, and I'm sure you agree with that.
Absolutely, 100%. In fact, 53% of patients say today the reason that they did not move forward with care, it wasn't because they didn't want or need it. It was because they felt like affordability was the barrier. They didn't see a path for them to be able to afford the care, so they just, fingers on the chalkboard, let me think about it.
The first thing I want to actually talk about is I give a lot of discussions about third-party financing in my seminars, and when I'm live in person with people, I always ask the question is, who in the room doesn't use third-party financing? And there are some people who definitely raise their hand, and it usually relates to the fact that they don't want to pay the percentage to the bank, to the financing company. And my answer to that is always, well, I'd rather they pay you in full and get paid rather than you being the bank. And I'd rather have 85, 87, 89% of something than 0% of zero. And many times, if you don't have an option, the patients are going to walk away and have zero. You're going to have zero because you're not moving forward with treatment. So can you just talk about, for a practice that says the office manager, doesn't want to sign up because we're losing 12 or 15%. What would your answer be to that? I'm curious.
Yeah, it's actually a very common problem, and a lot of times what it boils down to is the loan product that's being offered. If a provider is offering a treatment protocol that is cash based, they can usually afford to take maybe a 10% hit. Because now they're getting 90 cents on the dollar. But when they have a situation where insurance is involved, then that's a completely different animal, because now I have the insurance, fee for service, I'm getting paid there, and then I have the patient financing. So really what this boils down to is finding the right loan product that is going to meet the needs of the provider and the patient base. And a lot of times this really comes down to, in our industry, we've really focused on these introductory finance programs like the 6 month, 12, 18, 24, whatever month, same as cash type products. You don't need to offer those right away. I think that they're great products to have, but they're expensive. So knowing that really statistics tell us over and over again that patients are more concerned about affordability, the better thing to do is look at the different loan products and find a loan product that is not nearly as expensive, and one, again, that fits the treatment protocol that you're offering, and again, with maybe extended terms that make it doable.
So another point that you brought up is, the other answer I get is, well, I accept insurance and I'm already taking a 30% write-off because I have to take the insurance to bring the patients into my office. I don't want to take another 10% off or 12% off. So what would your answer be to those types of patients, those practices who are already taking insurance but yet are having a difficult time fitting the third-party financing into figure out the best way to make money? Because you take another 10%, you're really not making a whole lot of money on the treatment you're doing.
Yeah, exactly. So it's kind of the same thing. It's really sitting down with the different lenders that you're enrolled with and find out the different loan products that they offer. I don't encourage providers in that situation to use the same as cash product immediately, because that is a much, much more expensive loan product, right? You're buying down interest. So rather than do that, perhaps we do an installment loan. Maybe we do an extended term type program. And again, those are typically less expensive. You'll find that those are usually, in a lot of cases, 3 to 5% in merchant discount rate versus that 10 to 12, 15%. And some of the discounts, obviously are really steep when we're dealing in patients really with subprime or tertiary credit. So we have to look at our patient base and really figure out the best loan products to make this financially feasible for everybody.
And I agree with you 100%. Obviously there's room for many companies in the space. Obviously there are a couple of bigger players right now. There's been one gigantic player and a couple companies have really made a charge over the last couple of years. So I know you mentioned when you talk about a broken bridge between diagnosis and decision. So where does that bridge usually collapse inside a dental practice?
It starts at the website, because what happens so often is that the patient comes into the practice, they sit with the provider, and then we start talking about money. And doc, that is not the right time. And that's why I think a lot of patients think that this is a bait and switch, and they get apprehensive and they don't trust as much. When we start talking about the money conversation at the website, if we start talking about it as throughout the entire patient journey, then it's not such a big surprise. And again, when patients trust converts. And what's happened in our industry is that for years and years, we relied on insurance. But we know that insurance is almost becoming supplemental in nature, and we're in retail medicine today. So we have to think through, how do retailers, and this is healthcare, and so try to blend those, but how do most consumers become aware of lending? It starts at the website. It starts in all of their marketing.
Yeah, it's a conversation. When I was in practice, I used to let my team new patients know, and if I spoke to them beforehand, which anybody in my schedule, I tried to speak with them before the appointment. I call it the disarming technique, where you disarm the patients, because I would let them know that I will try to find a way to make things more affordable to them if they come into the practice. So I wanted to remove that barrier from the conversation, but I did have them come with some questions like, how is your credit? I wasn't being nosy, but depending on how the credit is, you're going to eliminate some of the third-party financings from being able to be used. So I wanted to have a better idea of where I could be from a financing perspective, but also I wanted to know what their budget was. If somebody comes in and they don't have a budget, it's hard to give them an offer of treatment if you have no idea what their budget is. So if somebody says, well, I can pay $500 a month, that the most you're going to be able to get from any third-party financing that's no interest is going to be $12,000. 24 months no interest. It doesn't ever get longer than that. So those are all questions that I used to ask patients, because I felt it was important for them to remove that barrier, and I was going to do my best to make it affordable to them, which is why I was very good at getting a ton of third-party financing being used.
And that's why you were so successful, because you started talking about that early. And I say all the time that when patients trust converts. And what you established in the beginning is trust. And they realized that this wasn't just going to be insurance related. And you were having a conversation with them that spoke not just about their clinical diagnosis, but how to move forward with the continuity of care. And that is really what you were just ahead of the game, which is great, and that's what we're really trying to teach the industry to do.
Yeah, and it even starts beforehand. It starts in the reviews. It starts with all these things before they even call the office. So if they trust you beforehand, they will most likely move forward with treatment if you can make it affordable to them. 100%. And that's where that third-party financing comes into play, because some people are going to need to pay for things over time. They can't afford to pay for it in full at once.
And I think a lot of times providers think that patients are really concerned about interest rates. And this is one thing that I think we need to be really mindful of. Today in the United States, 82% of Americans have a credit card in their wallet. The average interest rate on a credit card is 24.1%. Reality is that patients are looking for affordability. You nailed it. It is not about it's about how can I do this within the confines of my budget, and that is different for every single patient. Every patient is different, every diagnosis is different, every financial situation of every patient, and I'm sure you encountered this, is different.
100% so. And if it meant that they have bad credit and I needed to go to one of the companies that will lend to someone with less than ideal credit, which means it's going to cost me more money to get that loan, like you said, I was willing to do that because I'd rather have 87% of something rather than of 0% of zero, like I mentioned before. That was the cost of doing business for me.
Well, and the other thing that you did too is people are sitting around a dinner table. I think sometimes we forget about that too. So you created a way, and I know beyond a shadow of a doubt how big of a fan you are, excuse the pun, about reviews. And you're absolutely right. And these patients are sitting around a table and talking to their family members about what you did for them. And they're telling them, you found a way, you figured it out. And the patients that are the ones that were struggling the most were probably the ones that were most appreciative of what you did. and
Oh, yeah.
found a way for them to get the care that you had prescribed.
Yeah, I always talk about there was one woman, her name was Kim, where she literally was in dire need of treatment, and I found just a way to get her some funds, and she became a trusted fan, raving fan of my practice. Wrote a review. She did a couple of videos. So I used the video during my my on-demand class to show the appreciation that some people show when you go out of your way to make sure that they can get the treatment done that they want. So that has a lot to do with it as well.
Well, and I think we also do a lot of assuming, right? We know what happens when we assume, right? And I use kind of a personal story. In 2008, when the market had crashed, I had this healthcare equipment leasing company. I was going through a divorce. I called 2008 the year from hell. The year I either figured out the year what I was made of, or but that was the year. Of course, we started healthcare finance direct, and this is the facts. I had a black on black Mercedes, wheels that cost more than most cars, which I'm humiliated today that I think that was a little arrogant on my part. But I drive up with my nice little car, my cute little kids who are dressed nicely, and I'm wearing, at that time, the Coach bag was cool, right? And you would look at me, and you would think that I had all the money in the world. I had $75 a month to feed my kids on. We need to not assume anything about anyone. And like you did with that patient, you created a way. And when patients, again, when they start talking about their money, when they start sharing that information with you, you're building a bridge that is not going to probably crumble. They're going to stay with you because that's not a conversation you just want to openly have with people.
I agree 100%. Let's talk about the flow in the practice. I know that, I brought it up obviously prior to them coming in. Obviously you have the information on your website. Talk about some, new patient comes in, you're going to do an exam, you're going to do some x-rays, you're going to do a treatment planning session. At what point should that really be discussed? How often should you get the patient involved when they want to know about the financial side of things? Not even the money side, but what payment options you have. So what does a case presentation kind of look like to you, rather than sound like you're just selling them, is really what I'm trying to get at.
Yeah, well, I'm glad you said that, because the first thing we teach is to solve, not sell. We're offering access, we're offering hope. So this really, again, it starts at the website, but it starts when the patient checks in, because a lot of patients ask the question, how much is this going to cost? And what I will say in that conversation is, I'm so glad you're here. And we'll just use Sally as the example. I'm so glad you're here, Sally. Listen, you are an individual. You are an individual patient. And what we're going to do, I'm so glad we're going to have you meet with Doc. We're going to figure out exactly what you need, because I could give you some numbers and I could be completely wrong, right? Because doctor's going to make the diagnosis. And then after that, you're going to meet with a treatment coordinator and we're going to walk through what is best for you. We're going to check your insurance and we're going to figure this out together. And I think in that conversation, what happens is it's empathetic. It said that I cared. And now that conversation is consistent throughout the practice. So that's what happened at the front desk. Now, patient goes and talks to the doc. And if the finance conversation comes up, the doc needs to be consistent. And what I always encourage is they do what I call a hand off, hand up, introducing the patient to the treatment coordinator, care solution specialist, and then they sit down together and talk about the needs of that particular patient. And then once, just like what you did with your patient, you started to figure out, she told you right then, I have credit issues. Well, for heaven's sake, let's not go and run her credit at a super prime bank if she's not going to get approved, because that's just a bad patient experience. Let's talk, let's figure out what's going on, and let's select the right lender based on the treatment protocol, what she needs, and that's how that conversation really goes. And you got to know the different lending products. You got to know what is available. And you really need to have sort of a plethora of lenders. You need to have super prime, you need to have near prime, you need to have a revolver, you need to have an installment loan, just like if you were going to go buy a home loan.
Right, I agree 100%. That's what I taught too. You love my case acceptance and financing class because I gave them a list of 8 or 10 lenders they can use, and I said none of them charge you fees for just having the service, having the loans available to them. You need to have everyone available, and you need to be an expert in which one will apply to a specific amount. If someone wants a humongous treatment plan, $90,000, Proceed Finance was the one you would go with. Because they extend credit up to those levels. If you wanted someone who had really bad credit, you can use Cherry or Sunbit. If they already had a Care Credit card, you'd probably want to use Care Credit. So you need to have multiple lenders, and you need to be the expert and understand which one is going to be the best fit for the patient, and not ask the patient which one do they want. They don't know anything about these things. They don't. That's a big deal. Now, one question I have for you is there's a lot of companies now that are recommending that practices just pre-qualify patients and running soft credit checks on them just to see if they're going to qualify or not. What is your feeling on that?
I'm torn because I think there's going to be some regulatory pushback on that because there is a regulatory issue. It's called permissible purpose, and every single time somebody's running credit on you, whether it is known or not, the patient should know. And that's really as a consumer, I want to know if somebody's running my credit, even if it's not going to affect my credit. I still want to know that somebody's lifting the hood, right? So I understand the value proposition behind it, but I do think it's absolutely imperative that the patient knows. And again, that goes back to the trust conversation. If patients find out you're doing that, and they don't know about it, and then they find out about it, because they can go and find, even though it may not show up on a credit report or compromise their credit profile, like from an inquirer perspective, they can still go and see who's pulled their credit. And when they do, and they will, they're going to see, what? You pulled my credit, you looked at my credit 5 different places, right? There's some real, there's some reputational risk there.
I agree 100%. So obviously we've started to talk about the fact that you need more lenders than just one, okay? So, but you also need to have a lending strategy, and you need to know a little bit about the tiers so you can kind of advise patients. So if you were talking to a practice, let's just assume they only have Care Credit, okay? Mm-hmm. We'll just start with the one that mostly everybody has anyway. How would you walk them through the process of adding other lenders to their practice so they can come up with something that involves different credit tiers?
Absolutely. So what we do as a diagnostic, there's 35 different questions that we ask, and just like a diagnostic is done at the practice, we want to diagnose exactly what's happening and figure out each individual practice, because what we've done for years is we've tried to create lending to be one size fits all. Patients aren't one size fits all. The financial conversation is not one size fits all. So we need to figure out where the conversation is starting, where it's happening, who's doing it, how it's being done, what lenders are enrolled, and like you said, if they're enrolled with Care Credit, fantastic. I'm a huge Synchrony fan, and there's a major reason why every practice should have Care Credit. By the way, they're so well branded. It's only a matter of time before somebody's walking in with a Care Credit card. So it really is a matter of figuring out what treatment protocols the provider's offering. And is this cash-based? Is this, concierge type medicine we're dealing with? Are we dealing with strictly insurance? And then backing into, again, those dollar amounts, like you said, perfect example where you're talking about larger transactions. Lending Club and Proceed are the ones for those bigger cases. But sometimes we need to have a local credit union. We need to find a local or regional bank to fill the gap, because the local girl makes good. There are some HELOC products that are coming out, right? And there's a HELOC product that's coming out. It's like 5 to 7 minutes. It's going to be an incredible product for those large cases. So it's really, again, it's a matter of figuring out that individual practice, what the provider loves to do. I think that's one of the big critical factors. What does the provider love to focus on, right? I mean, if they love doing implants, they love doing aligners, whatever, clear aligners, whatever. So it's a matter of figuring all that out and then really putting together a playbook and saying, these are what you need to do to fix these issues, and these are the different lenders that are available. And they change all the time. You know as well as I do. They come and go. So there's only one that's really, really stood the test of time. Well, a couple. There's really two, I should say that.
So if someone was listening to this and they only have Care Credit, again, we'll use that one. What other lenders, and you know it better than most people do, what other lenders, and we can throw our names here, what other lenders do you recommend they look at? And what do you think is what do you think is too many, and what do you think is just the right amount of lenders to have in a practice? Let's put it that way.
So it really boils down to what the treatment protocols the providers are offering. Because if they're offering an average treatment protocol is $20,000, it probably doesn't make a lot of sense to have the revolver, right? The revolver is a great product, but the installment loan is ideal for those larger treatment protocols. So again, zeroing in on the treatment protocol and then figuring out the type of credit in the demographic, right? So we need to figure out, are the majority of our patients, are we in Walnut Creek, California, where the income, is higher, right, versus Burlington, Iowa. And I use that example all the time because in Burlington, Iowa, very likely we're going to have to use more of a Sunbit. We're going to have to use more of a Covered Care, Healthcare Finance Direct. We're going to have to use more. We're going to have to use more of a lending type product versus a bank product. Now,
and also before you go further, sorry to interrupt you. You mentioned something. You said revolver. Just to clarify, revolver is Care Credit or Alpheon, because there is a revolving credit card where once you pay it back, you get access to the funds again, just like a regular credit card. Whereas Sunbit and Cherry and those companies, they are actually a loan that's being taken out, which is a one-time loan. Once they pay it back, if they want more, they have to reapply. So correct. I just want to, for those listening, I want to clarify that difference because some people don't know that.
Yeah, I'm glad you did that. Yeah. So the revolving loan product is a fantastic product when you have patients coming back over and over again, like routine care, because to your point, that credit line opens up again. But when you're dealing with a larger transaction, really probably north of $5,000, $6,000, $7,000, you really want to look at the installment loan, because if you fill up a credit line and the patient doesn't pay off especially if you're using a promotional product, it not only hurts their credit because they max out a full credit line. Just as an aside, what I always encourage anybody to do this, if you have a credit card, and let's say you have a $10,000 limit, don't use any more than 30% of that credit card. That really helps your credit rating. When you start really using that revolving type loan product and you max them out, it really does or can compromise the credit score. So on the installment loan, it's designed to be a longer term, and like you said, it's the same monthly payment. It's like a car loan. It's like a home loan, right? Same monthly payment every month.
Oh, thanks for describing that. I did not necessarily know that. So. I know that when somebody takes on these third-party financing, these financing products, there are some compliance concerns. There are some risks to the practice. It's more than just saying, "Hey, we're offering these products." So, can you talk about some of these things that patients do need to be, dentists need to be aware of? Obviously. Care Credit has some specific rules that you have to understand, and you have to get trained in. You have to every year still confirm that you know these rules. So, can you cover some of those things? Compliance issues, risk issues, reputation issues for the practice. We mentioned one already, which is just running everybody's credit, which you shouldn't be doing. But again, let's cover that now because I think that's really important for practices to hear as well.
Yeah, so there's really 3 states right now that are really heightened as far as compliance is concerned, and that's New York, California, and Illinois. And they have regulatory requirements. And the reason this really came to be was patients were calling in what used to be called, which was the Consumer Financial Protection Bureau, which is otherwise known as the CFPB. It's sort of disheveled now with the Trump administration, but they will be coming back, and probably fast and furious would be my guess. So the Consumer Financial Protection Bureau obviously is the governing body for consumer protection. And so in those 3 states specifically, they put guidelines in place because patients were calling and complaining and saying that the practice was saying this when it was really that. And quite frankly, often I think it probably was that the practice was explaining it okay, but if you don't have any documentation, which I strongly encourage practices to do that, you end up with no recourse to and then that's where it gets ugly. the bank has to extract money from the provider's account, and it's often not, the lenders hate it worse than you do, but they don't want an audit over it either, and they're required to do what they have to do. So in like, to give you an example, like in California, there's actually a form that you should be giving to patients before you even have the dialogue or an application is submitted, and it speaks to what they're doing about third-party financing. In California, there are some regulatory requirements around language. Interestingly enough, it has to be in English. And then there is a host of other things that you have to do. So like in California, the patient actually has to apply. In the state of Illinois, you cannot have documentation in the operatories or at chairside. You can't talk about lending after the treatment has actually started. So my challenge with a lot of these regulatory, the complexity that is coming, and why we're so focused on regulatory and compliance, in fact, adding a massive program to FinanceRx, which is going to be a lot fixing the compliance, because what has happened is it's really confusing and it's different in every state. So it does get, especially if you're a practice and let's say that you're a practice and you're working in Missouri and Nebraska, right? And you have somebody that maybe is working on both sides of both of those states. That can get really, really confusing, and confusing for the treatment coordinators, care solution specialist, and then also the patient. So those are just some of them. I mean, the list is quite extensive. And there's UDAP, which is Unfair, Deceptive, Abuse Act. And what happens why I think a lot of this stuff is being looked at too is we often have the finance conversation at the front desk in front of a room full of other patients waiting to be seen. That's a HIPAA violation. That's a UDAP violation. There's practices out there that are still have like a 3x5 cards, and they're billing credit cards every month. They're pulling the card, and I'm like, yeah, you don't want to be doing things like that. So I could spend 2 days just on the compliance conversation, so I'll shut up.
So what is the goal, just so we can get this out of the way? You're obviously helping practices, I guess, deal with all of the issues related to financing. So you're getting them certified. What exactly does FinanceRx do?
So right now what we do is the diagnostic to really figure out where the money conversation is breaking down, and then we give a playbook, and we will help the providers fix that, those areas that are for all intents and purposes broken, right?
Lacking or broken, correct.
Yeah,
correct.
Where the bridge is cracked, or where the bridge is actually snapped, right? But what we are working on right now, which will be out in probably about 45 days, is a full compliance platform that will embrace the entire money conversation, but it will keep the practice in compliant within the state that they're working in with all the appropriate forms. So like in the state of California, there will be documentation that this is the form that you need to print down to the patient, right? So because all this stuff changes constantly. And so to make sure that the practices stay in regulatory compliance. And the beautiful thing that really happens out of it is it's one of the very few times that compliance is actually really going to be valuable, because not only are we going to get the practices in regulatory compliance, because most aren't, and it's not because I think they tried to do anything wrong, they just have never known. We've never taught this stuff this way. We are also going to see the case acceptance skyrocket.
I agree with you 100%. We have some limited time remaining, so what I want to do is I want to get through 8 to 10 of these lightning round questions, and then we'll grab how people can find out more about FinanceRx, and we'll wrap up the podcast. So a couple of by the way, these are supposed to be answered like that, like literally one line, no drawn out answers here, just to be clear, okay? All right. First question is, who would you love to collaborate with in the dental industry, and what would you love to collaborate on?
So I'm really Brian Laskin, and really because he's an educator.
Okay. What have you learned from the most successful person you know?
To be authentic, always.
I like that one. Let's see what we got here. What book would you like to go back and reread as it's made a great impact on you the first time you read it?
The Rockefeller Habits.
I didn't hear that one. Rockefeller Habits. Okay. What three adjectives describe your strengths?
Innovator, activator, visionary.
Okay. Do you believe there is some sort of pattern or formula to becoming a successful entrepreneur?
Yes. I think that to be a successful entrepreneur, you need to think through what you're doing, because 90% of businesses fail. So there definitely is a path to success.
Got it. What do you think your unique skill is that has helped you become successful after all these years?
Transparency.
That's great. Let's see, what else do we got here? What was the first thing you wanted to be when you grew up, when you were a kid?
Country music singer.
Oh, okay.
I did it.
All right, that's good. If you could take a class to learn anything you wanted to be, what would it be?
Broadcast journalist.
Okay, that's cool. Let's see here. What motivates you on a daily basis?
The patient, and to do what I do, the patients getting the care that they want and need, and solving the issues of those patients that are not getting the care.
Okay, two last questions. How do you capture and keep track of ideas? Do you keep a notebook? Do you do voice memos?
Both.
Okay, and last question, I ask this of everybody. So either business or personal, doesn't have to be business related, business or personal, subscriptions that you pay for monthly or annually. So what is one subscription that you cannot live without?
Canva.
You answered those really well. That was really well done. So Nancy, why don't you let people know how they can get in touch with you if they have any questions, a little bit about how they can find out more information about FinanceRx, and then I'll take it over and we'll end the podcast.
Absolutely. So the best way to get a hold of me is Coy for Nancy Coy, NCOY, at FinRxstudio.com. You can obviously go to FinanceRxstudio.com. But yeah, either one of those ways, and I'll get notified. It'd be great.
Well, thank you for sharing your insight into the healthcare financing or dental financing space. Obviously, I'm a big proponent of everything that you are talking about. A lot of things that you mentioned, I talk about in my on-demand class. So I appreciate you joining me today, guys. If you think Nancy could be helpful to you or a colleague, please reach out. Please recommend the podcast. As I always, like us, review us. Recommend us to anybody you want to learn from. Myself, the Raving Patients podcast comes out Fridays at 5 a.m. and we've got about 8 years of a podcast to catch up on if you're just listening to me for the first time. As always, thank the sponsors, Dental Intelligence, CallRail, and Net32 for their support. Reminder about my event, Supercharge Your Dental Practice, superchargeyourdentalpractice.com. You can use the code RAVING to save $100 on your registration. And as I end every single one of my podcasts, remember, your reputation matters. Until the next one, Nancy, thank you so much for joining me today, and we'll talk to you soon.
Absolutely. Thank you for having me.